Hi, this is Michael Regan with the Regan Team Home Loan Group, and welcome to this week's Real Estate Roundup. First, we're going to start with the Case-Shiller Home Price Index. Now, this is a gold standard of home price appreciation metrics because it actually tracks houses as opposed to random sales. It actually tracks, hey, this house sold on this particular date. Now it's reselling. What was the total appreciation gain? And it showed for the month of November, we were up 0.4 month over month, and we're up 1.4% year over year. So again, really good news going into the slow season, which typically home prices don't explode in November and December because there's less demand. You're still seeing home price appreciation, which is great news for anyone who owns a house. Now on to PCE. So this is a measure of inflation, and it was delayed due to the government shutdown last year. So this is for the month of November. And it showed that the headline inflation was up 0.2 month over month, and core was also up 0.2 month over month. So year over year, the headline number is at 2.8%. Also, the core is at 2.8%. But the really good news is if you're seeing the run rate, the 3-month run rate is only at 2.2%. So that's near the Fed's target of around 2%. So it just shows inflation is cooling down. And you see that with reduced gas prices. And this is great news because as inflation drops, mortgage interest rates also follow. Now into pending home sales. So pending home sales were down 9.3% month over month and 3% year over year. And this in part is due to, number one, the slower season of the winter season, but we also had some pretty inclement weather around the country. And so obviously when there's a snowstorm or ridiculously cold weather, people aren't looking for homes. So it's something to keep an eye out for. And we are already seeing that come January, that we're seeing a lot more home buyers look to get pre-approved. Activity is picking up a lot more than a typical January. So I think that's going to change as we see this report move forward. What you can take out of these reports is that, number one, inflation is coming down, which is going to help mortgage rates come down. There's also a lot of pressure for mortgage rates to come down from various government entities. They want home affordability to increase, especially in an election year. What that translates into buyers is interest rates drop, demand is going to go up, and I've already seen that this January. So if you're on the fence thinking maybe I should wait, you shouldn't, because again, as rates come down, there's more buyers out there that can now qualify, and you're going to see a lot more demand for those houses, so prices are going to go up. Now onto the charts for the week. So right now we're up 3 basis points in the Fannie Mae 30-year fix, and that's a lot better than we were last week because you'll see the trend in rates is the rates did get better, but then last week they got considerably worse, and we're kind of treading water this week, but it seems to be we've rebounded because last week it was a lot of geopolitical news in terms of Japan's bond prices went up because Japan was taking on more debt. That's calmed down since then, so rates have gotten a little bit better, but nonetheless, they aren't as good as they were previously. That being said, we do see rates a lot lower than they were last year, and this is going to be a really good buying opportunity. You're going to see a lot more demand as rates stay lower around that 6% to high 5% range, and you're going to see a lot of people now being able to afford a house and ready to buy. So be wary out there that it's not a good time to wait. It is definitely the time to look at buying now because it's just going to get more expensive the longer you wait. And that's it for this week's update. We'll see you next week.